G'day, buddy miners. Another day, another bloody shitload of stories that we're about to rip out. I'm pretty sure every one of these could use Axis mining technology. I don't think there's any mining company that doesn't need them. The trusted advisor.
Mining, development, exploration.
Everything.
They can all use them. Mate, you look fresh.
Mate,
Look at you.
I was going to sort of keep the mullet, but then I'm like, I'll just take a bit more off. I've probably gone a bit deep.
Debuting the back of your neck today.
Mate,
It makes you look skinnier, I would just say.
Mate,
I
the
don't know why, but
the women pulling me up in the street has just been unbelievable. God,
gone from
it's
zeros
just-
to one.
it's just 100% increase.
Mate,
Yeah.
that's not the only thing new. You got a new haircut
Oh,
and new
mate,
sticker on your
How
mic.
good's Milesy? Giving us some stickers for me mic. How good's that, mate? Milesy, I was wanting to meet Milesy and
GC16 here.
at Diggers, but on the last night having a kebab at 3 o'clock in the morning, he rocks up a Miles contracting unit. I'm like, Milesy, he's coming in to get a pizza after night shift and give me a lift home afterwards.
You both finished night
legend.
shift, eh?
Yeah, mate, oh, what a bloody day. Right, what do we got today? We've got JD. I am so fucking proud of you.
I thought you might be, mate.
You've gone balls deep into in situ recovery over in Wyoming.
Mate, you might need to hold my hand through it, but I'm excited to talk about uranium. And then we've got another rogue one, which I'm keen to hear about. MetalsTech. It's been a freaking fascinating story in the background. I think we spoke about it maybe half a year ago or so, right?
Yeah, mate. There's it's colourful. Colourful to say the least.
It's come to a bit of a head with sort of yesterday and stuff, some really interesting stuff. And Ali,
Oh, doing-
Goldies, I trust.
Goldies, of course. Murchison correspondent.
When we need merchants and stuff, we bring in Ali GC.
No, Meeka's got their big funding package to develop their Murchison project, so we touched on that a little bit.
Oversubscribed too. Bloody well done.
I don't think you're allowed to say those. Are you allowed to say oversubscribed? I remember our
I
former
know
boss
they
used to hate that.
Yeah, they don't like
everywhere.
using the word oversubscribed, so we used to swap it with well supported, strongly supported. Basically means the same.
I've
Matty.
gone into the Gold Coast, the Resource Rising Stars is on at the moment, so all the prezos are coming out, and I was just scrolling through develops, and because I'm always bloody interested in them, because he probably gave me my first job, but yeah, I've gone into an unnecessary Excel spreadsheet session.
Yeah, I saw you give an Excel a good run for its
Oh,
money.
mate, I don't know where I've ended up, but it's cool. Right, JD, take it away with the bloody yellow cake, sunshine.
All right, like you said, Matty, we're
Proud
going.
dad moment. Yeah.
We're going to Wyoming, ISR project in the US of A. So if you want to frame this one kind of positively, you could say they might be the next uranium producer on the ASX. If you want to frame it in a bit of a different light, you could say they're the second worst performing uranium ASX stock over the past couple years or so. ERA obviously taking the cake there. So
Have we said the company yet? Peninsula.
Peninsula.
Yeah. I don't know.
Now
if
we
we've
have,
said
mate.
it yet.
Now we have.
Peninsula we're talking about.
So these guys are in the construction phase right now, looking to start commissioning at the end of this calendar year. But, you'll get the first drums out by Q2 of next calendar year. They've had a few hiccups, and we'll quickly run through what the context around this one is, because we spoke about it over a year ago now. They had UEC essentially, they terminated a contract. Peninsula drew the short straw there. They were essentially sending a intermediate kind of product, which would be toll treated by UEC, which meant that Peninsula then had to build the end of that processing facility themselves so they could produce a dry yellow cake product. That subsequently required a fair bit of capital to be raised. Matty, you're pretty intricately familiar with the ISR process. So why don't you give us a bit of a rundown quickly of how it relates to them and where they were kind of, having to add on processing?
Yeah, it's actually quite, you can draw so many parallels between these ion exchange columns and how it works to gold processing, believe it or not. Essentially what they were doing is selling a uranium concentrate. You'd say it's like selling a gold concentrate without going through the final process. So like with these ISR projects, you have this, they call it the PLS, the pregnant liquid solution, the acid that goes through the paleo channel, then goes into these ion exchange things, the lixiviant, and then those ion exchanges have when they talk about the resin is like you got the pregnant liquid solution going one way and the resin going the other way, exactly the same as a gold processing plant with your gold going one way and the gold in cyanide going one way and the carbon going the other way. So the resin is what takes the uranium out of the pregnant liquid solution and attaches onto the resin. So what these guys were doing was going through that process and then getting that uranium enriched resin then processed at another facility instead of gold. They have to go through the elution, electro winning, and then to produce the doré bar. So they were effectively selling like selling loaded carbon effectively, and then someone else processing it. So, that's you obviously need the extra capital and to even go from, is it UO4? I think it is. Like what the actual bright yellow cake that you see is not U308. U308 is actually, I think it's like an olive color. So like there's an extra step to process that to actually get U308, which is what the converters prefer because they want just U308 given to them, and then they can convert it into UF6. They don't want to have to go from, I think it's UO2 or UF4 or something. I'll be happily corrected by anyone.
Not a UFO?
Something like that. It's bloody, yeah. So as you said, JD, a lot of extra capital to go in to get it to that stage.
Exactly, mate. So they raised in June $106 million, and in January they completed a $60 million SPP and placement. The placement had been done a couple months prior to that. So that kind of...
So two raises since the
exactly.
rug pull for the US.
Yeah, so that initially that rug pull happened in July of last year, and then they came out with a restart plan and everything. So today you're sitting with about 11 rigs on site. These are the ones that are chucking in, like you sort of spoke to there, Maddie, the production and injection wells, that I guess the first step in the ISR process. They say that's 76% drilled and cased at mine unit 3. So you got a mine unit 1, mine unit 2, 3 and 4 being developed.
And they're preconditioning at the moment, aren't they?
Exactly. So they're dropping the pH in 1 and 2, and in this quarter that we're now currently in, they'll be doing the same at mine unit 3.
Yeah, so that, and I think, I haven't looked too much into this. I know this is what Boss had to do because of the salt in the, like, salt is your enemy in bloody uranium processing. Having salt is like having copper with your gold, because so they've got to flush acid water through without, like, before they put the sulfuric acid in to actually, by the sounds, dissolve as much of the salts or the carbonates they can to condition the well, so that when the pregnant liquid solution's coming out, if there's shitload of salt in it, when the salt attaches to the resin, preferentially ahead of the uranium, same as how copper attaches to carbon preferentially than gold with the cyanide solution when it's cyanide soluble. So that's why getting rid of, they talk about the RO, having RO plants at these things and like preconditioning to get as much salt out. So salt water is the enemy. And then when you take the uranium off the resin, which is like the next step after what they were going to do, you actually just add salt to it and it takes the resin off the uranium. Bloody
all a bit of chemistry.
It is a freaking chemistry set. Yeah. It's like you need Walter White there. Bloody stop bloody cooking, mate. If Walter White was a real person, he would be the man for ISR, because it is bloody an absolute chemistry set. Oh,
you nailed it, mate. And that preconditioning, that's a sort of 2 to 3 month process, which is why they kind of have to start it pretty soon to get it all humming by the end of this calendar year. There's a sort of interesting facet of ISR projects. You might notice that they don't tend to be debt financed. You know, we noticed that with Boss, they were cashed up. They had obviously uranium on hand as well. And the same can be said for Peninsula right now. And it's kind of twofold. You firstly need offtake, which these guys have and we'll get into in more detail later on. But then you also need a proven reserve. And this is kind of done through delineation drilling, which is more or less what you're doing when you're building out the well fields. So it's kind of timing and costing at the end of the day.
Yeah.
You don't get to that point, and essentially you're not giving the commercial banks the confidence that they need prior to doing it, because you may as well do it all at the same time.
Yeah.
They did say, though, that they now have a financial advisor on board to try and help them lock up a bit of debt. So maybe, you know, come the first half of next year, once they are actually producing a little bit, they can get a bit of debt to sort of support working capital and these sorts of things.
Yeah, I'm not sure how because I think it's all like mud road area in that, but like, yeah, I'd be interested to know like how exploration works with these things, because it sounds like there's no point drilling into it if you're not going to use it as a well field. Like obviously the most efficient way is to use it as an injection well or an extraction well to then delineate it. But yeah, it's interesting. But you're time constrained because you want to delineate it, but then you want to get it established to start producing.
Yeah. So to give a bit more sort of rounding on the whole project, they've got Ross. That's the area where the processing plant now sits, and then they've got a whole bunch of land in a sort of long kind of rectangle around it. So you've also got Kendrick, which sort of plays into the mineral, the measured and indicated resource as well. So that'll play in over that 10-year mine life that they've got. So they talk about 58 million pounds in resource, but like the vast majority of this, over 40 million pounds, sits in inferred in the wider kind of area. So the actual amount that they're going to pull out over the 10 years is a bit under 15 million pounds. So steady state, 1.8 million pounds, but it takes a while to kind of get there. And in terms of grade, they're talking high 400s or low 500s ppm. Now, to give a bit of context again, Boss is 620 at Honeymoon, 1,100 ppm at their Alta Mesa project in Texas, and Budenovskoye is, again, a bit over 1,100 in Kazakhstan.
I think those Kazakhstan ones are, for like Boss and that, I think the channel's like 3 meters thick. You go over to Kazakhstan, they reckon they're like 6 to 8 meters thick. Like the channels are so much bigger.
Yeah.
And they just, and I don't think Kazatomprom have limits on. I know the ones over here, you have limits on how much acid, the rate at which you inject it into the ground, like so it doesn't there's not
you don't want it to
so much
spread beyond
pressure
the aquifer.
Yeah. So, and it depends on where the water table is, but I think Kazatomprom, I think they can just jam it in as quick as they can. I think.
And that makes
God,
sense
mate,
because
I'm exposing myself to get corrected on a fuckload of shit today. It's like my first metallurgy episode, and Nathan stored us on the phone straight away.
Yeah, I mean, you can see that production from Ross dials off right after 2026 in 2027.
Yeah.
That's where the sort of initial grab comes from. But then they got Kendrick, which is the next one. So you can see there's not too many years of life into that one.
Yeah.
So to get into the offtake and more of the finance stuff where I feel a bit more at home, you can see they've got 6 offtake contracts that covers roughly 40% of their planned production over the next 10 years. So that totals 6 million pounds of production. Like I said, I think it's 14.8 million that is the total in the mine plan currently. So roughly 40% that we're working with there. And it's based off a fixed base with escalation as well as market-linked pricing. So it's a bit ambiguous. You don't totally know what they're going to get paid for it, but you can dig in a bit. So they've got this 2023 restart study, and there's some interesting stuff in there. So they assumed an average $67 per pound price. Now that involves $73 assumption for the uncontracted material, and they used a $55 assumption on the contracted material. Since that came out, they did sign up another 1.2 million pounds in offtake.
Yeah.
Interesting. Did they have to shuffle some of their contracts as well when they, because they were expected to be in production earlier?
Yeah. So that they spoke about this would have been late July of last year, the offtake parties being friendly. They also did have uranium on hand at the time, which they no longer have. So
to deliver some.
Yeah. I think from what I've heard, like the offtakes, it's like you don't owe it. It's based on like steady state and nameplate. I've heard some arrangements. It's not like you have to deliver that this year. Some of them are like you have to deliver that once you hit steady state and commercial production and things like that. So I think
each contract has its own
depends
nuances.
whose hand you shake.
Yeah. So what you can tell from that 1.2 million pounds that was signed up in March of this year is that they estimated a maximum revenue of US $117 million, which indicates a maximum potential price in that contract of a bit under US $98 a pound.
Jeez. Oh, so that would be
the maximum.
The
there was a lower bound of $88 million in revenue off that one.
Oh, they won't be getting that now unless it bloody goes up.
Yeah, so there's a sort of range within there that you kind of work. So like you kind of said, Trav, they did have some commitments to meet. So they've got an in-process inventory, which is a pretty negligible amount. So it's safe to say that they don't have any on hand right now, which plays into 2025. So in 2025, they've got to deliver about 470,000 pounds of contracted uranium, and they've guided to 700,000 to 900,000 pounds to be produced over that year. Now, here's where it gets pretty interesting. That was previously 1.1 million. So they had a pretty substantial drop down in what the first year, 2025, production is going to be just a couple of weeks ago. And this was a classic. This was an 8-page document, and it was in the last page of the document where they said, there's been an update to what we're going to do next year. And, they didn't put too much meat on the bone there, but
It's not good.
that's potentially over like a 40% drop in what the production is going to be for the next year. And that leaves a heap of questions, because they just said that about 2025, but we don't know if that's going to be, have flow-on effects for 2026.
It's kind of like that. And you said, 40% of steady state production was contracted, but if you have like 30% of your steady state kind of
Exactly.
falls back, there's a lot more contracted.
So now all of a sudden, on that kind of lower bound, it's well over 2/3 of next year's production is going to be contracted out that they kind of have to meet. And interestingly, they still said they anticipate to be cash flow positive by Q3 of next year. They've maintained that date for, the best part of the last year. I find it, very interesting that production could fall off so significantly and you're still going to be cash flow positive at the exact same point in time. That, that kind of leads me to have a few more questions. And, a lot of it kind of went unanswered. It's just one paragraph that they chuck in at the end of a project update. So
after learning a bit more about ISR, it fucking sounds like the moving parts and the ramp up to get between the lixiviant and the resin to make sure they're working together, because changing one affects the other, and the lithology of the ground and everything. It is like, fuck, it sounds hard. It sounds bloody hard. Like just a big chemistry set and the hydrogeology of it. Like, fuck.
And they didn't provide any sort of reassuring language around it. They weren't saying things like, 2026 will be fine, or we don't suspect that this will impact future production, anything like that. It was, it left it sort of pretty open-ended. So I think that the kind of logical flow on to, at least to where my mind went, is how much cash do they have, and are they going to be able to see this through? They've got $100 million on hand. There's another 330 million options floating out there with a 10-cent exercise price. So a couple of weeks ago, they were around 10 cents. They're now around 8 cents, so none of them are in the money. But if they can, get up and stay up over that price, that could potentially bring in 30 million Aussie bucks. We'll kind of see at this moment in time, it doesn't look like it's going to happen. And they expire in March of next year. So they said they needed $100 million to see them through to steady state in April of this year. Since then, they spent 20, so that leaves 80 to be spent. Like I said, they've got 100 right now. So that kind of implies a cushion of $20 million, but I'm not filled with confidence in and around what's kind of, happened in the past couple of weeks, although there is potential they could work out some sort of debt arrangement if it's a more marginal amount of cash they need. And they have mentioned in the past that they're working with the US government to try and get some sort of support in and around that. But that's
even
it's
a working
definitely
cap facility or something
exactly.
like that to tie them over.
Never know what convos are going to happen at WNA this week, because that's when the fuel buyers and the bloody producers are all in the one room.
Yeah, and a lot of people are incentivized to see this one come good. There's a lot of contracted pounds out there, and those utilities will want them to come online. They'll want it to happen. So to get a bit of a feel for how much cash they are going to produce, they did some very back of the envelope rough numbers, and once costs have normalised, say they have by 2026, and assume that they can still do that number, which is a big assumption that they said, £1.4 million. Assume the uranium spot price, again, a big assumption, but $80 a pound. 2/3 of that production will be contracted. I'd say that's in and around the $60 a pound price. The rest in the spot market, they'd get a higher price. I think you could estimate they'd get around $67-ish per pound for that. Going off their all-in cost of roughly $51 a pound, they would generate EBITDA of $22 million, or roughly a bit over Aussie $30 million. Now, again, that is super rough, but this is a company that's capped at 260 million Aussie right now. It's not a crazy amount of cash flow with a lot of kind of risk attached to it. So yeah, it's definitely one to look out for. And the EV looks relatively cheap right now, given they've got such a substantial amount in cash. But you can't look at that because that needs to go into the asset,
Fully funded
developed
EV,
asset.
yeah.
I think it's a big it's going to be an interesting back end of the year.
Yeah.
That's for sure, because we're in the when they say the Northern Hemisphere summer, how it's notoriously quiet, but it's also, I think, by the sounds, the fuel buyers just go on holidays for 2 months. And so I think now's that point when it's like, if something's going to happen, it's going to happen like post-September based on the historic lulls. So.
And these guys have just got to do the work, right? They've got to just get Ross up and humming. So it's all kind of on their plate, and then we'll see what happens in the broader uranium market, in and around that. But
mate, Jesus Christ, we'll be talking about it, JD.
We will be,
mate.
mate.
Now I've got you on board. Far out. How good is it?
I hope I did you proud, mate.
Mate, on the back of that, like, as I said, how freaking complicated these ISR things are, and especially with the lithology and like the mapping required and everything, like, why can't VRIFY map the lithology of these paleo channels? And hear me out, the AI that they've currently got, so they know how to do AI, using the AI for the friggin' like injection pressures and the extraction and mapping the area of influence. I can see a subsidiary, VRIFY Uranium. VRIFY Uranium AI. Look, Steve de Jong's a busy man, but he needs me to sort of just keep an eye on potential opportunities, and I think I might have found one for him. Steve, if you're listening, let's talk. I might get some skin in this. It's my idea. VRIFY Uranium.
It's a new revenue stream, mate. I see it.
Yeah, mate, they're growing like a friggin' toddler, like bloody that eats a lot. Like, it's just growing.
Growing a lot.
Growing a lot. Oh, good work, VRIFY. Happy to do business with you. Right. GC, actually, before my Excel rant,
Yes.
I would like you to probably do yours first, because mine doesn't really come to anything. So I think it does, but okay. I don't want to hold the bloody money miners from getting their Murchison GC special.
Oh, very good.
Do you hold this stock?
I don't.
We found one.
We found one. Oh, so Meeka, their funding package for developing Murchison is being secured. Exciting stuff. Lots of money flowing their way. So,
a lot more than they originally forecasted when they were going debt only, that's for sure.
Yeah. So the deal itself, they've secured a $73 million funding package in total, and that comprises a $26 million gold loan, a $12 million gold stream, and both of those are from Oramet. And in addition to that, they've also done a $35 million institutional placement at 5 cents, which includes a $5 million equity investment from Oramet, who provided the loan and the stream, and I believe board and management also chucked in half a brick into that as well.
Sort of comes off the back of a pretty big rally in the stock, right? They're kind of like up 50% in a month, and then kind of raise the equity.
Why wouldn't you? Hey?
Yeah. No, I mean,
call it the Aaron Colleran raise. The bloody AIC one was done to perfection.
Picking a good time to raise equity, that's for sure. So no, they certainly did well on that front with regards to the equity. So as far as the funds, what they're being used for, we'll flash up a table from their prezzo today on the sources and uses. But essentially, the money will be used for the remaining development and ramp-up costs for Murchison up until basically positive cash flow. And they've also, in light of the sort of expanded processing capacity when they picked up that larger ball mill a couple months ago, they're accelerating access to some high-grade underground areas to support that, so putting some money into that. And, the usual exploration, corporate costs, all that sort of a stuff, which leaves a $22 million working capital buffer.
Use of funds, building a mine.
Building a mine, basically. So by the time all that washes out, they'll have a pro forma market cap of around just over $100 million at 5.5 cents, which is where they're roughly trading as at now. Once that placement's done, and the formal docs for the Oramet facilities is due to be all signed up this month. And first gold is expected sort of mid next year in the September quarter next year. So, probably just under a year away.
Gold loan and gold stream, Ali, like in simple terms, what's going on here?
Yeah, so
what's the difference?
So we'll step through each of them sort of to explain the mechanics, how each of them works. So in simple terms, the gold loan, Meeka receive $26 million from Oramet. In exchange, Meeka have to deliver 9,000 ounces or, over 12 months, so say 750 ounces a month from September next year to August 2026. And that assumes a gold forward price of just shy of Aussie 3,900 an ounce.
So are they getting paid, like, is it one of those they're getting 95% of the gold price sort of thing, or
that's more of how the stream
That's
sort
the
of
stream.
works?
Oh,
yeah.
yeah.
So this is essentially a gold denominated loan.
It's like a prepay in some ways, right? You get the money up front, but you've got to deliver the physical over predefined quantities over time.
Yeah.
So it's sort of like a hedging structure, but you're getting given the money like
Upfront.
it's at a
You're chipping away at
at a
your
price.
loan by delivering gold.
Yeah.
Yeah.
You've locked in the price though, yeah.
Yeah.
Like in a sense, yeah.
So the way this one works is, so if the average forward price increases, the number of ounces they have to deliver decreases. So like that total value that Oramet get is sort of fixed, and it just flexes depending on the gold price, whether it's more ounces, slightly lower price, or higher price, slightly lower ounces. They're sort of guaranteed themselves what they're going to get at the end of that sort of gold loan maturity.
Yeah.
So essentially, regardless of the gold price, Oramet give Meeka $26 million to get $35 million roughly worth of gold over a 12-month period. So that's a 35% return in a year.
For Oramet.
For Oramet.
Yeah.
And that's not including they've sold them some gold call options as well. And they're also getting 25 million warrants from Meeka. So that would sort of juice up their return even more as well.
That's a good deal.
For Oramet, yes.
I want to tip into that one.
Yeah, where can we tip into that?
That's a bloody Noah's rule job. You bloody fully understand that. Have you?
Jeez. So then moving on to the gold stream, which we sort of touched on before, Maddie. So again, trying to explain this in simple terms. So Meeka get $12 million from Oramet. In exchange, they have to deliver 4.25% of the total gold that they produce to Oramet until 5,000 ounces in total is delivered to Oramet.
Yep.
And Oramet buy those ounces at 20% of whatever the prevailing spot price is at that point in time. Then they've actually got sort of an additional stream on top of that. Once the 5,000 ounces from the main gold stream is delivered, then there is what's called a tail stream. So 1.5% of gold produced for whatever the remaining life of mine production profile is, they can purchase at the same price, or 20% of the spot price. Meeka actually have the option to buy back 80% of the tail stream, so that 1.5% component I spoke about, for $5 million to reduce it to 0.3% of gold production rather than 1.5% as well. So if you assume the same forward gold price we spoke about before, just shy of 3,900 Aussie, Oramet basically giving Meeka $12 million to get back 15.5 million, sort of worth of gold. That's the first 5,000 ounces.
Yeah.
Which is like a 30% return over roughly the first, 3 years of production. That's sort of based on the DFS production profile, looks like it basically takes around 3 years to get that first 5,000 ounces. And then you've got the tail stream as well, that 1.5% that continues sort of once that's been completed too.
So is it sort of like 10% per annum return?
For those first 3 years.
For the first 3 years. So it's
very roughly.
So similar to getting a loan at 10% per annum.
Yeah.
Like, effective, like in a way.
Yeah, that's a simple way to think about it for sure.
Yeah, I like simple.
Yeah. No, because especially this stuff's a bit definitely a bit confusing. So,
But I
simple is
suppose
best.
the thing about this, these are, I guess, what Shawnee Russo was talking about, these different ways of getting financing without having hedge books.
Yeah, no, that's right.
Effectively.
And so,
But you're still giving away some of the upside of the process. Like in the loan, they've sold call options, so they're kind of, the counterparty kind of gets some of the upside as a result of those sort of dynamics.
Yeah. But there's probably, is there a bit less risk than, some of these historic hedge books we've seen that they go for so long and become that out of the money, whereas there's less risk that this, you avoid getting in that situation a bit less?
I don't know if it's as simple as like there's less or more risk. I think it just kind of depends on the terms of these instruments,
Yeah.
You could do kind of a bit of
the gold
payoff
price
chart.
at the time as
Yeah.
well.
Yeah.
You're comparing a lot of variable factors at once to sort of figure out what's best. But just to give a sort of a broad brush summary, all of that gold that Auramet is getting from Meeka in the various forms through the gold loan and through the gold stream, that represents less than 5% of basically the production plan that they've got in the DFS. And for the first year of production, it's less than 25% of production.
So looking at other mobs that have had debt and where there's like literally 15 to 25% of production hedged, and then it becomes out of the money, that's when it sort of gets away from them, whereas this looks a bit less exposed to if the spot price went flying.
This is assuming
if you had hedges in place,
because where the hedging can sort of become problematic is sort of, as we touched on a bit earlier with Peninsula as well, if this has slowed down, the production profile is going to be off 20%, then that hedging percentage is not 15 or 20, it's maybe 50% of your production profile and things like that. So all the sort of different things to weigh up there.
And if you just kick it down the road, which isn't really applicable here.
No, that's right.
Historically been.
So, I mean, why this alternative financing through the gold loan and the gold stream versus, say, a traditional, stock standard project finance debt piece? I mean, it's pretty expensive money. My very rough Excel calcs on the gold loan and the gold stream, inclusive of the tail stream, based on the DFS production profile and that gold forward price we discussed earlier, just shy of 3,900 an ounce, have Auramet generating at least a 30% IRR over the life of mine, and that does not include, the call option, and doesn't include the warrants because that was too hard for me to figure out. So normally, like these non-bank lenders, the sort of project finance IRRs they'd look to be in and around that sort of, and again, this is a general rule of thumb, 15 to 20% IRR. And bank lenders would probably be even a bit lower than that, and then they'd try and get it up a little bit more by providing hedging and things like that. So it appears on the expensive side. However, I feel that this to me represents almost a bet on the gold price. Because if the gold price runs, particularly in the next 2 years as they're ramping up and they're, got that first year of production, this funding package could potentially be a lot cheaper than raising equity or, bank style debt. But, if it goes the other way, become a whole lot more expensive. So
okay, so Meeka need the gold price to go up for logical reasons, but just in relation to the debt, to make the debt more bang for buck?
Well, if you're viewing that through, what's the, the most expensive to cheapest options for financing, you want the gold price to be staying in and around where it is, if not higher.
Yeah.
To be sort of considered more favourable cost-wise compared to sort of other potential funding options.
Go gold.
Go gold. The other thing, Auramet participating in the placement, we've seen this before where financiers will chip into the sort of the equity component of a funding package. So it certainly can be viewed as a vote of confidence in the project. I mean, certainly the company will tell you that. Any company will tell you that.
Depends when it happens. If it happens when they're like if you like into ramp up and it's a distressed raise and then the lender tips into the equity raise, it's because it's a different theory then.
No, that's right. And so, look, they've already got some equity exposure in Meeka through the warrant. So it's interesting to see that they've sort of added to that equity exposure through $5 million in the placement. Look, it's certainly not a bad thing. They've got some sort of extra alignment with the company for things to go well. But albeit, remember, their exposure with their facilities, so the $26 million gold loan, $12 million stream, is far more than their equity exposure. So just something to keep in mind there.
It might have been back and forth going on terms and actually a request of Meeka's or their advisor to throw in a commitment to the equity.
Yeah, and that as well for sure. So the other interesting thing, if we look at the debt or alternative financing versus equity split, this is practically a 50-50 split between the two. And we have to look back a few years to look at some recent sort of Australian ASX examples, other sort of single asset gold developers. And this is a fair bit lower than what we've seen back in, the Bellevue, Capricorns and Calidus examples, which were around that, say 2/3 debt, 1/3 equity. Funnily enough, by the time a lot of those companies did follow-on raises from their sort of initial funding package announcements, it kind of did work out 50-50 debt equity. But I feel like Meeka perhaps have taken some learnings from recent history and been a bit more conservative on that alternative financing to equity sort of split as well. And as we sort of touched on before, they've certainly taken advantage of their sort of strong equity price and, rightfully so. So kudos to them on timing that quite well.
Yeah, because I think prior to that, what they raised in the placement, it was like, by the time you pay off the debt and the mine life finishes, what are you going to be sort of left with beyond expansion or finding something new? Whereas now they've got that $35 in the door at a higher price. They've got a bit of good buffer now.
Oh, 100%.
Yeah.
So the quantum, will it be enough? This could be very famous last words. But I feel, all things being equal, it is. And assuming the gold price stays, roughly where it is. In their DFS, they show peak negative cash flow in, year zero of, negative 44 million. They've currently got a $22 million working cap buffer. The DFS was, or one of the prices they showed in the DFS was at 3,500 an ounce Aussie. So, with spot closer to 3,700, there's another $200 an ounce of extra wriggle room they've got there. They've also got a DFS update coming out in this year, later this year in December, sort of showing a higher, or they seem to be indicating a higher production profile to reflect that extra processing capacity we spoke about, which is useful because then the percentage of production that's attributable to the gold loan and the stream is lower, and they've got more exposure to the gold spot price, which is hopefully where it is now, or if not higher.
Especially when that's what, as you said, over the life of mine, 95% of the production is going to be unhedged. So that's where they'll make the money from the gold price.
Yeah, so the more exposure they can get to that, the better. And getting that first year of production right, which is basically, the period where they're paying back that gold loan, as well as the stream, is so critical. And they sort of see, if we flash up this is from the DFS, the production profile from, open pit versus underground mining and the sort of the various deposits it comes from, pretty much all of it is from oxide open pits in the first 12 months, which, on paper is probably the least riskiest ore source you could, get your gold from.
And you can smash it through bloody quick.
Yeah, exactly.
Hey, G, did they use I didn't read the docs, but did they use the famous last words fully funded, or are you just putting the curse on them?
No, they did. No, I think we've got on the where we were the second
Fully
bullet point.
funded.
Expanded Merchants and Gold Project is now fully funded by a 73 million package.
Well, they're confident too then.
So it sounds like they're pretty confident too. As far as what's next, as we said, they'll be first gold mid next year, September quarter next year. I think they're constructing a haul road in between sort of St Anne's and Turnberry to Andywell, where they're refurbing the plant there now. Grade control drilling, all of that. That camp that they bought really cheap as well. They're sort of installing that, setting that all up. So it seems like, all things going well, they should be okay. And I feel like that the quantum with the amount of working capital buffer they've got in the gold price environment should see them through. But you never know until the fat lady sings, of course.
And the thing they got on their side, the COO, he was ex-underground manager at Andywell in the door. It's either in the Dore,
really
probably in the Silver Lake days after Silver Lake took over Dore. So they've got a lot of knowledge of Andywell, so it's not like they're going in blind. So bloody, yep, I'm small goldies, mate. I'm fucking rooting for them.
Exactly.
So I hope it all bloody goes well. So, mate, another truck of DSI bolts and mesh heading up to the Murchison. That's one of the most exciting things.
Oh, that I don't know why they haven't got that in their sort of key milestones for the next year. Arrival of DSI bolts.
I want to see the first truck of DSI bolts and mesh bloody getting dropped off at Andywell. Mate, because they're probably dropping them off on the way all through the Murchison. They're already driving past.
They might have a warehouse there.
It's just off the Great Northern Highway.
Mate, that Great Northern Highway is just bolts and mesh humming up and down that friggin' thing.
Oh, good.
Bloody, mate, Derek Hurd, he's a bolts and mesh logistical expert, servicing Australia and the world with the greatest ground support I've ever seen.
It reminds me of the Johnnies, just over the Causeway, Victoria Park, just over the Great Northern Highway, Murchison.
What is it? The bolts in open pit, but chuck them in there too.
Chuck them in there too, just to be on the safe side.
Mate, you don't want that high, anything happening to that high. No, you want to save cash and get them gold loans paid off, within reason. Right, good old, as we said, the conference in Gold Coast, everyone's doing a couple of prezos at the moment.
Yes.
Develop, so I had to read through Develop because it's got my eyes peeled. I'm waiting for bloody Develop to drop the hammer on copper.
Very, very, very small ding ding for me on that one, of course. We had to have one today.
Good on you, GC. Do you just follow, who's some good mining personalities around here? I'm going to buy shares in them.
Yeah,
you've got all the big dogs.
All the big dogs. Just call it the big dog ETF.
Yeah, so looking at the prezzo, like the interesting bits and Woodlawn and Sulphur Springs, both fully permitted for operations. So, sitting there ready to go. As we know, Woodlawn's, developed, I think they've got about 2 years of production ready to go as in terms of the mine development. So set up. Trafigura funding for Woodlawn set to be finalised this quarter. So that was that $100 million prepayment loan facility. 5-year concentrate offtake for all concentrates produced. But here's the interesting wording. Flexibility to give up to 20% offtake to a minority party. So the Trafigura don't get the whole thing. They can still give 20% to someone else. And on the next slide, which we've talked about and they've been fully open about, strategic asset level investment process has commenced, which I think has been word going around that they're looking for a project level investment from, who knows, could be a downstream, could be anyone.
Yep.
But it says there's a small amount of parties. So like whether that's could be a POSCO, could be like a, someone in bloody the rise of Japan and South Korea.
Toho, I think.
Yeah.
One of those.
So now why, I guess, and the question always is, why would Develop want to sell part of this project when they could, get 100% of the bloody upside potentially? So, and look, it's to do mostly, I think, with this remaining $70 million in contingent payments for the Woodlawn acquisition that are owed to Orion from when Heron went into admin. So now I'm pretty sure, I can't confirm, but I'm pretty sure all 4 of these conditions still have to be paid, so including the reserve ones. So, and because I think they publicly said they don't want to raise capital, they don't want dilution, but but they can issue these in shares as well. So they might want extra cash for acquisitions and to get some money in the door for selling something at the project level. Now, I might be wrong about this lower bound reserve, but I've gone bloody deep. I couldn't find anything saying that it was paid. So the payments are $12.5 million payable on definition of 550,000 tonnes of zinc equivalent underground reserve. Then another $7.5 million payable on 680,000 tonnes of zinc equivalent underground reserve. And then $20 million payable on FID, which has not been announced yet. And then another $30 million payable on 18 months of continuous commercial production. So obviously triggering the start of Woodlawn triggers triggers the 20 million anyway. So there's a big balance thing going on, I think. Now, I couldn't definitively find if they have a zinc equivalent reserve of 550,000 tonne yet or not, because the latest reserve they put out in April says 6 million tonne at 2.8% copper equivalent. And so that's 168,000 tonne of copper equivalent. Multiply them together. Copper today is 3.2 times the price of zinc. So very roughly, without recoveries and everything, that's around 537,000 tonne of zinc equivalent tonnes. So that's below the 12.5 million payment trigger. That's the bush maths, as
Mick
McMullen said. Oh, buddy, I'm a bush maths guy too as well, Mick. But I thought I tried to avoid it, and I tried to ask other people, but
you couldn't help yourself.
I had to go. I went down a stupid Excel rabbit hole here, and I thought I better follow the calculation method that they provided in that April when they disclosed the updated reserve used in the deck. So if you use it, I'll show it up. I'll even show me bloody Excel thing on screen here, using like the calculation method for copper equivalent and zinc equivalent. I got copper equivalent grade of 2.6% instead of 2.8 and 9.4% for the zinc equivalent grade. But everything is rounded to the nearest 100,000 tonne and grades are rounded as well. So I think that's why the numbers probably come out a bit different. So because if you go off 6 million tonne, which is the total reserve tonnage, times the 9.4% zinc equivalent I got, gives 564,000 tonne of zinc equivalent tonnes. So that's just over the $12.5 million trigger payment. But it's not exactly 6 million tonnes, I don't think, because if you go convert the metal back to the tonnes using grade, it ranges from 5.86 million tonnes to 6.4 million tonnes due to the rounding.
Oh, Jesus.
So fucking 5.86 million tonne at 9.4% zinc equivalent gives bang on 550,000 tonnes of zinc equivalent. So after all this fuckery, I reckon the zinc equivalent reserve is possibly just slightly below
that trigger point.
By pure luck, 550,000 tonne, and hence I don't think it's
triggered yet.
Has been paid. I think maybe when the annual report, I couldn't find any issue of securities or any mention of it, so I think that's all still owing.
It's
so
really
where did I come to with that? I don't know.
No, I think the takeaway is your bush maths basically equals the actual maths. That's the takeaway.
Bush maths never lets you down.
Plus or minus 10%. That's all good.
So I don't. So it'd be interesting to see when. Triggering a reserve increase will trigger that payment.
I do find like these contingent payments tied to resource or reserve milestones interesting because at the end of the day, like you who operate the project, you have control over that work stream and kind of, we saw a few of these structured around like the MinRes farming agreements and stuff like that for lithium and all that sort of jazz. But it's like at the end of the day, you can kind of control some of the assumptions or variables in your reserve update that will be favourable. And heck, who would blame you for timing that to perfection for your milestones?
That's what I'd do.
Yeah.
But it wouldn't be live, would it, in terms of that tech in there, if copper went up more in relation to zinc, that means I don't think Orion would be ringing up hey, we've just redone the spreadsheet that Matty gave us. You're at 552,000 tonne now. Cough
it'd
up.
Be public, whatever's published.
Based on those. And those prices they used in the deck, you see 10,500, I think it was copper there. What's the future real term prices? What's the word for it, Trav?
Yeah, long-term consensus real
long-term,
price,
yeah. So it's not today's price.
Interesting.
Cool. All right. I'll just want to let the listeners know I'm just not just
can
a dud.
operate
Can
an Excel.
mate. Bloody first in maths every year at school. That's a fact.
One more. This is a rabbit hole team. I think JD mentioned this story briefly back in January this year, and since then there've been some peculiar developments at MetalsTech, and I'll give you guys the high level synopsis. The asset I'm keen to talk about with respect to this company is the Sturek gold mine in Slovakia, of all places, and MetalsTech, they picked up this gold mine in December 2019. It was first by agreeing to an option and then exercising that option. You can see here in the ASX release they put out when they first signed the option to acquire the Sturek gold mine, that on the next page over, the proposed terms included some generous related party benefits. At the time, it was proposed that 20 million performance rights to directors as an introduction fee and a 2% net smelter royalty to a company which was a related party of MetalsTech's chairperson at the time. I'm not sure if these actually came into fruition or not, but I noticed them on that page. Anyway, fast forward a few years and the company embarked on a few lithium things, but they dropped this scoping study on Sturek in November last year. At face value, the financial numbers for the project were tidy: 95 million capex for $240 million NPV 8 at a $1,550 US gold price for an IRR of 116%, 9-year mine life.
All looks good.
I think there's some permitting challenges and stuff like that, but don't worry about that just yet. On the 20th of December last year, so about a month later, MetalsTech said that they'd appointed Min Metals as a strategic advisor to help them coordinate a strategic process on the Sturek gold mine. They said there were 8 Chinese parties and 4 Western parties in the data room, looking to do something. And they said Min Metals would get a success fee of 5% on getting a deal done.
Who is Min Metals?
I don't know. I'd heard of them before.
Yeah, right. There's not much about them online.
Right. Okay.
Here's where things get interesting. In January this year, MetalsTech, they drop an announcement saying they had received a non-binding offer from a Canadian private equity group called Transmetal Fund LP for the project for cash up front of 36 million plus up to another 45 million in kind of contingent payment. Now that's a fair bit of money, and it was certainly a lot more than the market cap of MetalsTech at the time. And MetalsTech, they said that when they revealed this non-binding offer, they said it was just the first offer to come from the process, and that they still open to other offers from other parties that are in the data room. Now, what? I know, yeah. I mean,
really?
I know. Like, see, you and I have both worked on sales processes before, Ali, in the past. It is insanely unusual to make an ASX announcement about a non-binding indicative offer received from one party mid-process.
And
then say you're still open to other ones.
Mate, so normally...
It's not even a binding term sheet or something.
Exactly. And normally an NBIO is confidential, but it's just unprofessional to disclose like any kind of offer you received if you're running a process. It's also unusual to get one offer at a different time to the other offers. You usually choose a deadline for stage 1 bid submissions if you're running a process, and in general, everyone submits their bid either on that day or the day before, because there's informational disadvantages.
Consider them all at the same time, right?
Yeah, and you're like, if you submitted it a week early, like you're at an informational disadvantage if the advisor or whatever, like if something happens with that information before others submit their bid. So you always submit it right at the last minute.
Yeah,
that's just the way you do things.
Yep.
So, But the unusual elements of this announcement, they didn't stop there. As Jeremy Raper tweeted at the time, if you Google Trans Metal Fund LP, you don't find anything. No company website, no directors, etc. There's also no comment or press release from anyone affiliated with Trans Metal Fund that I can see, either in the MetalsTech press release or elsewhere. So with more than a few question marks floating about, MetalsTech unfortunately found themselves in the sin bin for a few weeks as they appeared to be going back and forth with ASX, who was pulling them up on their disclosure. And before being reinstated, they uploaded an announcement that included a bit more colour on the mysterious Trans Metal Fund, presumably after ASX requested it. So this time they list 3 directors of Trans Metal Fund and give their bios. There was this Michael Bohm, James Yang, and Parviz Farasangi. In May, we get another process update, and that is, again, unconventional to say the least. This time they say they're holding site visits for parties at Sturek, and they state one of China's largest gold miners has recently attended a site visit as part of its due diligence process. At least they didn't name the entity this time, but it's still a bit of an unconventional release in relation to a strategic process you're running.
I've never seen that before.
No.
I don't think so. We've got a party
Very
conducting
unusual.
DD on site at the moment.
I mean, George Sakali's Diggers presentation, probably the most similar recent example I can think of, but it is quite unusual to be speaking about that so publicly.
Yeah.
Yeah. Okay.
So a week later, they launch an SPP to bring a bit of money into the company. And I'll draw your attention to this quote in the accompanying announcement when they launched the SPP. It says, the directors and major shareholders have flagged their intention to participate in the SPP alongside other shareholders. Now, this SPP takes a bit of a U-turn a month later when they say they received $2.4 million of interest from their shareholders to participate in that SPP. They say they want to take all of that money without scalebacks, but they strangely choose to now do it via a placement instead of an SPP now. So they pop out a prospectus at the same time to be able to take the money as a placement instead. And with a placement, you've got, these people, they've got to reconfirm their interest. It's a new offer in some respect. And so in that process, it looks like they didn't get the full 2.4. They only got 1.6 million in the door, leaving an $800,000 shortfall for them to place. And one of the nuances of doing it as a placement instead of an SPP is that it becomes kind of complex for directors to participate in a placement without shareholder approval.
Yeah, they have to get shareholder approval. Yep.
So instead of...
is that for all placements, is it?
Yeah.
In a placement, directors need shareholder approval.
So remember that initial thing I said that the shareholders intend to participate in the SPP? Well, now that it's a placement...
The directors...
Yeah. Now that it's a placement, it instead, it basically, as far as I can tell from the disclosures, the directors didn't didn't tip into the raise at all. And because there was no kind of conditional commitment or anything like that in the wording. And surprise, on Friday last week, discussions between MetalsTech and the Trans Metals Fund have been terminated.
Oh, wow. Wow.
Really?
Yes.
Yeah.
But it gets even juicier. There's more.
What do you mean? Stop watching Succession.
That's only last week we're up to now.
Fuck off.
Who would have thought?
Shout out Stella GC.
Who would have thought the private equity group you can't find a website for and submitted an NBIO. I just wouldn't have predicted that
it doesn't exist.
Discussions would term. No, it exists. There's details, but who would have thought it would just be flimsy in the end? I just would never have seen that coming. Anyway, then yesterday there's a pretty interesting development. Up until this point, I hadn't mentioned that there were 3 only directors of the company. Okay. One of those is an executive director. The other 2 are non-executive directors. Well, the executive director, together with another substantial shareholder in the company, they agreed to sell all of their shares and all of their unvested performance rights to a third party at a pretty hefty share price premium to where MetalsTech has traded. It was, the implied equivalent price was about 53 cents per share, and they would receive $18.5 million total for that. Now, concurrent with this announcement, one of the non-executive directors resigned, presumably immediately, leaving MetalsTech with only 2 directors. And it's a requirement of ASX to have 3 directors. So they unfortunately had to go back into the sin bin as they try to find another director to join the board so that they could actually freely trade on ASX again.
I've also never heard of performance rights being sold.
Yeah.
That's obviously happened, but that's a different one.
It gets stranger than just the performance rights and the shares being sold, because if you peel through the 32-page announcement, like when there's this becoming a substantial shareholder and attached is this sort of the share sale kind of deed or whatever. So the buyer,
and these are the buyer of of their shares.
Of their shares. The buyer of the shares is this entity called Minerva Investment Company and Zhao Li. So very interestingly, the buyer has agreed to pay both sellers their outstanding receivables owed by MetalsTech as well. So I assume to be kind of accrued director fees and consulting fees. But you know, for each of the kind of selling parties, there's a few $100,000 there. In any case, like, you know, and this is the interesting thing in that deed as well. Those documents, they show a settlement date of the 17th of December, and so there's like 3.5 months to go to see if Minerva stumps up the cash, or you know, we'll see if they turn out to be another Transmetal fund. But it's such a rabbit hole. And I didn't even mention the buyer of the shares, Minerva. In that agreement, they put an address, and it shows this address in Kowloon, Hong Kong. Flash it up here. Well, if you just chuck that in Google Maps and look at the office building it pertains to. Jesus. Just like, yeah, it's kind of these.
Maybe that's a stock standard office.
Maybe it is.
Hong Kong, I think. Who knows?
Oh, look, yeah. I wouldn't, yeah. Who knows? Just another day in ASX, guys.
Wow, what a roller coaster.
Oh, it's like a clothing district.
They definitely look like apartment buildings. People hanging their clothes out on the balconies. But yeah, I don't know.
Oh my goodness.
I don't know. Might have to go to Kowloon to visit.
Might keep you away from there, Trav. Wow, that's bloody. That is out there. I'm interested.
That was amazing. It's a hell of a story.
Oh, geez. I don't think...
Just when you think the story's finished, it takes another twist. That's amazing.
Yeah. So do you want to put your hand up to be their third director so they can read
No,
this?
that's okay.
I think... I don't know. Lucky Axis Mining Technology have got lots of clients. I don't think MetalsTech would be one coming anytime soon. Possibly. It's all right, Axis. We'll keep you humming with the rest of the world as the gurus for knowing where holes go. Who else we got?
In the show, we had VRIFY and DSI Underground. Who else we got, Matty?
Oh, mate, we have got plenty. We got a good old bloody Silverstone, a good old CRE Insurance, good old Greenlands Equipment, good old K-Drill, and can't forget about ADIA. I'm looking forward to the maiden ADIA at RIP this week. It's going to be bloody fruitful. And Mineral Mining Services, and don't forget to get a spark chart up ya. Hootaroo, money miners.
Hootaroo, guys.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.